But the question is, how do I know if I'm not trading against the trend?
What's up, everyone? Welcome back to my YouTube channel. Today's what we're going to do here is pretty much answer a question that we had from a member. Let's do this. How can I make this bigger? Uh, so that, okay, cool. All right, nice. So you can see from the far left that, we have Philip. Philip had a question on structure, and we're gonna go over that video. And I said that, is it cool if I can send you a a response with a recording? He said absolutely. Right. So let's dive into that one video and just see what he has or with his question, and see on what we can do as a team together, how we can cover his question and how we can answer it. Okay. So let's dive in and go from there.
What's up, bro? I had a question about structure, um, and I just kind of figured out how to articulate it. So, looking at this chart right here, I'm on the 1 minute time frame. Um, we're bullish here, right? Higher high, higher low, break, higher high, higher low, break, higher high, and then we go bearish because this gets broken right over here, right? Then we go back to bullish, but looks like it was just mitigating something up here, leaving some liquidity, and then went back down, broke this low right here, and then we got another. It's not a break, but it is a sign of weakness. I would consider. I guess you could let me know if I'm wrong because it went up, then went down, went up, big impulse move down, and that's my prediction there. But I'm trying to see if I'm following the rule of following structure, right? So on this 1 minute time frame, I just explained how I saw it going from bullish to bearish. If I zoom out, all right, now this is kind of where it gets a little bit confusing because I'm like, I don't want to trade against the trend, right? This trend is bullish right here, right? This is a bullish trend. But this, right? High, low, high, sorry. This is bearish, right? This is a swing high or swing low to a swing high, break a structure. Now we're bearish. But if we go back out further or even go out to like a 30-minute time frame, right? Now I'm bullish, right? High, low, um, liquidity right there. Then we got to break a structure over here, right? So now we're bullish. Zoom out even more. Let's say like a 2 hour time frame. And now this is bearish right here, right? High, low, high, break a structure, high, another break a structure. But this is bullish, right? But it's like if I keep zooming out, it's different. This is bullish, high or high, low, break a structure up here. But if I zoom out to like the day time frame, now we're bearish. So obviously I know if I'm like day trading or if I'm scalping, I'm not going to be on a daily time frame. But the question is, how do I know if I'm not trading against the trend? Because if I go on a different time frame, the trend will be different. Does that make sense?
Okay, cool. So what we're gonna do is cover his question on the chart that he provided. We're gonna go back into that day. It's October 11th, or October 10th to now, right? So like 2 days ago, because he was on a lower time frame. And so what we're gonna do here is we're gonna transition into trading view and see on how we can do our best to cover and resolve that market structure situation. Okay, cool. So what we have here is pretty much the AJ pair, and you can see from a weekly time frame. I mean, I like to start with a higher time frame just to see where we're currently at. And you can see from a higher time frame that we're just pretty much in a chop, we can say, right? It's just going back and forth, back and forth, back and forth, and it's just waiting to choose a direction to either go long or to go short. And that is just what it's given us on a weekly time frame, right? And so you can see that, I mean, none of this really matters. Why? Because, I mean, it doesn't, because you're just holding this high, this low, and this high. So technically it's still bullish. Came back down into S&D zones, going bullish again, broke structure again, came right back down into S&D zones again. And now price is just doing something like this to see if we can take out these highs, right? And so that right there is liquidity. But even though that's just like double tops, quadruple tops, does not mean, oh yeah, let's fully start full porting positions, and this is gonna 100% take this out just because we have liquidity on this range, right, or above here of this resistance. So let's just delete all that. And so what really matters here is just what this current structure went from bearish back to being bullish. And so in this case, you can see from left to right, you had this low came right back down being bearish. This low came from this high here, shifted right back up being bullish. Higher high, higher low, higher high, higher low, higher high, which is here, came right back down to test the orders in here. Now you have a new, pretty much higher high, right? Came back down and test those S&D zones. Higher high, higher low, higher high, higher low, higher high. And now you have lower low, lower high, lower low, lower high, lower low, higher high, right there. And that's it. That's all you need, okay? So what we can remove is the EMAs real quick, EMAs, and let's just draw out where it broke, right there, okay? So BOS, okay, that's it. That's the only area that we're looking for to retest into and then to run right back up. So again, this is a weekly time frame. And so what we have here is the last liquidation, right? So we don't want price to come lower than this, because if it does, everything starts shifting and starts going bearish again. So this is the low that made this new high, right? And you have the break in here. Cool. So now that you have that, let's just see on how price made this low, made this high. So you have higher low, liquidations. So there's nothing really that has, left unmitigated. The only area that has left been unmitigated was this at one point here. Okay. And that right there is an S&D zone where a price came into and just bounced off at, and then just started seeing a push up, right? So again, this high is still coming from here, and it's just testing the S&D zones within there. So it's very important to start from the higher time frames, just to see on where you're currently at and how you can break it down step by step, and just like the way we did from a zoomed out view, and how we just zoomed in to just see on how price was just continuing with that bullish order flow, right? Because on the weekly time frame, you have this to make that new higher high, right? And that's it. That's all we're doing here, is see on how can we continue with the overall order flow. So in this case, am I bullish on AJ? Yes. So, but does that mean I can't go bearish on a different time frame? No, I mean I could go bearish on a different time frame, right? And so let's just see what's really going on in here and how this went bearish back up to being bullish, and how is it going bearish again. So let's dive into a 4-hour time frame, and let's go into that one area that you marked, which was October 11th, which was, so right here, vertical, or 10th, yeah, here to here. Okay, cool. So let's see on how price came back down into the S&D zone and how it just ran right back up, right? So even though that price tapped in once, does not mean, oh yeah, this is it. It's just gonna start seeing higher prices, because I mean, it can come right back down again and test more orders in here, because this is just where the money's at, for price to come into to start seeing a rally again, right? And so, oops, let's just delete all that though. So let's just see on how price built up liquidity on both ends and swept it out, right? So you have lower low, lower low, lower low, lower low. You have all this equal highs, lower low, lower low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, shifted bearish, came right back up, shifted bearish, broke structure here, went bullish, came back down into the S&D zone here, and now you have some sort of consolidations in here. And again, this is only a 4-hour time frame, so you have nice S&D zones based off 2.0s, and price just delivered to the upside, right? And so let's just see on how price just ran up in here. So higher high, higher high, high came into the S&D zones, great. So lower low, lower high, lower low, breakthrough. Actually the breakthrough was this whole move, came back down, higher high, higher low, higher high, shifted back down to being bearish, came right back up to supply zones, ran right back down, made a new high, bullish. Higher high, came back down to being bearish. There you go. Now we found out our range that we're working with. And so that range that we're currently working with is right in here. Breaker structure right there. So actually the breaker structure is right here because this is the low that made the break off of that. So we can say that this is just an X. And there you go. Now you found the area where it was the last push up before the downward move occurred, which is here. This is the last area where banks bought at, and then they initially sold, right? And so now within that whole rundown, you have what? Imbalances. You have imbalance in here. You have imbalance in here. And now you have imbalance in here as well, right? And so just like what I teach you in the whole mentorship or in the Vault Training Academy, what can you do, right? You can grab this high to this low, and you can do, but this is a different way, just for the public, viewers. This is a different way. This is not the actual way. I teach something else, but you can do this as well on how you can expect where price can retest into and then to fall, right? So grab this high to this low, which is right here. And this is an area where we can, adjust our supply zones, right? And so we can say our supply zone is here. And also there's areas in here that you can use as supply zones. So you have two valid supply zones for you to go short. So you have this one and you have this one, right? And so let's delete that 50%. So all we did with that 50% is grab the whole impulse move from here to here. And that right there helped us identify the S&D zones. And if you want to learn more about supply and demand zones, I have YouTube videos about it. Make sure to check the YouTube channel, okay? So in this case, we had what? A rally, right? Just like what you said on your video. So if you go onto a 15-minute time frame, this is what you're referring to, right? So, we can outline all this if you want to, or just mark this up. So you have bullish, 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 bearish, bullish. So now that you have this higher high, price came back down into S&D zones, ran right back up, right? And so now that you have that, price is now bouncing off supply and demand zones to get us right back up into supply zones to come right back down, right? And so in this case, one supply zone has worked, and yes, you could have had, good sells in here, but the order flow or just from here to here is still bullish, right? So remember, each time frame has its own story, but your whole goal is how can you connect the 15-minute time frame to the 4-hour time frame, because each one has its different image or different picture. And so all you're doing here is just see on how money's coming into the market and how is it removing its, when price hits certain ranges or certain zones, okay? So in this case, that zone, the way that price came to that zone is still bullish, right? So there's still nothing yet for me, okay? And so you were somewhere above here, and you're waiting for price to come into this supply zone. This is what you had, and again, it's correct. So in this case, you had a breakthrough, higher high, nice supply and demand zones right there. Nice Wyckoff schematics, his supply zones, came right back down to test more orders, continue going up, bullish. And you can see that we're just looking at the way that price is mitigating S&D zones to make new higher highs, shift it right back down to being bearish, lower low, lower high, lower low, higher high, lower low, higher high, right? So technically still bullish. Demand, demand. Cool. So now that we have that, you have lower low, lower high, lower low, breakthrough. Higher highs coming from here. Tested, ran up higher. Higher high, higher high. The last liquidation, and there you go. The breakthrough below this is what would give me a bearish bias to confirm the supply zone. And for me to double confirm that, then I can look for a double break, which would be somewhere right here. Okay, nice supply zones in there. And it gave you actually two good confirmations to go short. And we can dive into that. Let's go on to a 5-minute time frame. And you can just see that all we're doing with the time frame is it's going to help us read more about the story and pretty much help us find how we can position ourselves, how we can find a good way to enter to pretty much get a good entry for a direction that we have a bias on or we biased on, right? So in this case, you have more of a break of structure. 1, 2, unmitigated supply zones in here. Great, Wyckoff in there. You could have had a nice short on that area, right? And so let's go into a lower time frame. And so let's just pretty much make this perfect. Break, break, and let's go into a 1-minute time frame. Right in here. So cool. So the supply zone that I would draw at would be here. Right there. And now you have what? Mini schematics in here on a different time frame that you could have got a nice sell in, right? Or you can use the things that I teach you in the mentorship, which is special confirmations, special strategies on how you can confirm a zone. And if you want to join the mentorship, the link will be in the description, and we have an active community, and yeah, just helping you step by step. Okay, so all in all, supply zone hit, came right back down into the S&D zones. For you to confirm this on this 1-minute time frame, you would have to wait for this to be broken, right there. So if you don't have access to the time frames as in 15-second, 5-second, then you don't have to worry about this, and you could just wait until an opportunity presents for yourself on the time frame that you're currently on. Okay, so let's just continue. So you have price hidden demand zone, intermediary structure making higher high, higher high, shift right back down, and I can technically use this area for a supply zone to go short. And there is a unmitigated supply area in here to look for a downward move. And you can see on how that played out to make what? The new break in here. So we had this low, new low, still holding this lower low, lower high, lower low, still did not break above here. So technically we're still bearish, right? And so let's delete this. And now we're just waiting for an opportunity for us to get into a trade. If you did not find an entry in here, did not find an entry in here, because everything here is just pretty much just very narrowed, and it just creates tons of liquidity on that. And some traders are using this as some sort of breakout, right? So we're just waiting for a nice expansion, nice run up, and a breakthrough to the downside again. So let's just see on where can we get that. Higher high, higher low, higher high, shifted bearish, lower low, shifted bullish, higher high, bearish, right? And so now I can zoom in. Where did the actual break come from? It started from right here, right? Supply zone right there. Cool. And how can I confirm the supply zone? Is that where's this high coming from? It's coming from right here. Cool. So now that this low, it's coming from the last push up before the downward move. Where do you have your nice supply zone? Somewhere in here, right? So again, all we're doing here is just pretty much looking at what would it be for me to trade and how can I position myself to get into a nice entry, right? And within that supply zone, you can just see on how I retested that supply zone perfectly. And you can honestly go for the breakthrough of this, or just already enter here with the stop loss above this wick, because this wick was the last liquidation of here, right? And so you can see on one time frame it might show you a body, but on a different time frame or one time frame it's going to show you a wick, and on a 2-minute time frame it shows you a wick. So but yeah, that was a good move, and all we're doing here is just flowing with the wave, and that's it. And look where price is at right now. It's rejecting. So you had the right setup, you had the right direction, but the only thing here for you to fix is to break it down, right, from left to right, from time frame by time frame, right? So just to understand, how are you going to target or how are you going to go from point A to point B, because now we're pretty much in a demand zone here, and price can now come right back up into deeper areas just to hit a supply zone and then fall again, right? And that's just on how money flows, how price mitigates imbalances, and how money's built up on both ends, aka liquidity, and how the composite man himself. And what I mean by composite man is just the banks, right? Buying in, selling in, and all that good stuff, right? But hope you enjoyed this video. Hope you got some out of it. If you have any more questions, feel free to reach out. And if you want to join the mentorship, make sure to check the link below in this video. It will be in the description, and we'll go from there. Okay. Have a good one, everyone. Peace.